Hi everyone. Every quarter, SCHY sends you a dividend check. You see the number, you deposit it, you move on. But there is a bonus hiding inside that check that most investors never see. It has nothing to do with how well the company's performed, nothing to do with earnings reports, nothing to do with dividend decisions made in a boardroom. It is a bonus quietly added or subtracted by something happening in currency markets that most dividend investors never watch. Understanding this one mechanism will permanently change how you think about international income. Hey, welcome back. This is SCHD, where we turn big financial ideas into simple steps anyone can act on. Nothing here is financial advice. Always consult a licensed professional before making any investment decisions. Let's get into it. The invisible pay raise. Here's the simplest way to understand what is happening. A company in Germany earns strong profits. It pays its shareholders a dividend in euros. You own that company through SCHY. When the euro dividend reaches your account, it gets converted into US dollars first. Here is where the bonus lives. When the US dollar is strong, you get few dollars for every euro. Your income shrinks, not because the company did anything wrong, but because the exchange rate worked against you. When the US dollar is weak, you get more dollars for every euro. Your income grows, not because the company did anything extra, but because the exchange rate worked in your favor. The company paid the same dividend both times. You received more money the second time. No extra risk, no extra research, just a currency shift quietly adding to every check you receive. This is not a theory. It has happened during every single weak dollar period in modern history, and the pattern is more predictable than most investors realize. The dollar's long cycles. Here is the most important fact about the US dollar that almost no dividend investor knows. The dollar does not move in a straight line. It moves in long, multi-year cycles, periods of strength lasting years, followed by periods of weakness lasting years. This pattern has repeated consistently since 1971, and each time the cycle turns toward dollar weaknesses, international dividend investors collect a pay raise that domestic-only investors never see. In the 1970s, the dollar fell sharply as inflation ran high and trade deficits grew. International stocks massively outperformed U.S. stocks throughout that stretch. In 1985, the dollar had risen so far that the world's 5 largest economies gathered at the Plaza Hotel in New York and agreed to push it lower together. Over the following 2 years, the dollar fell roughly 40%. International dividend stocks delivered strong gains in dollar terms on top of their local returns. From 2001 to 2008, the dollar fell roughly 40%, again as the U.S. ran large deficits and kept rates low. International stocks dramatically outperformed across the entire period. Then the dollar strengthened from 2011 to 2022, and U.S. stocks dominated. In 2025, the dollar fell approximately 10% for the full year, its worst annual performance since 2017. Against the euro specifically, it dropped over 13% through the third quarter. That single-year shift quietly added meaningful income to every SCHY dividend payment made during that period. The dollar will strengthen again. It always does. And then it will weaken again. It always does. The investor who understands this cycle does not panic when the dollar rises. They stay positioned and collect the full benefit when the cycle moves in their favor. The 4 forces behind dollar weakness. When the dollar weakens, it is never random. The same structural forces appear across every weak dollar period in history. Force 1, interest rate differentials. When U.S. rates fall relative to rates in other major economies, global capital moves out of dollar assets and into high-yielding alternatives. This is the single most powerful and consistent driver across every historical weak dollar cycle. Force 2, rising U.S. deficits. When the government spends significantly more than it collects, more dollars enter the global system. More supply with the same demand means each dollar buys less. Global investors track deficit levels closely, and when those levels become concerning, they reduce dollar exposure. Force 3, global capital rotation. Every major weak dollar period has coincided with global investors rotating money from U.S. assets toward international alternatives. That rotation means selling dollars to buy foreign currencies, which directly pushes the dollar lower. Force 4, overvaluation correcting. At multiple points in history, the dollar has traded well above what economic fundamentals justify. When that gap becomes too large, gravity wins. Currencies revert toward fair value over multi-year periods. And each step of that reversion is an automatic pay raise for international dividend investors. These forces do not flip overnight. They build and resolve across years. That is why weak dollar periods have lasted long enough for patient investors to capture meaningful income gains, not just a quarter or two. What this means for your income. Every time the dollar weakens against the euro, the pound, the franc, and the yen, it is a pay raise for every SCHY investor. You collect more dollars for the same foreign dividend, automatically, with no extra research required. The strategy is straightforward. Build your SCHY position steadily and consistently, regardless of where the dollar sits on any given day. The investors already positioned when the cycle turns capture the full benefit from day one. Those who wait for certainty collect smaller checks, while the move is already underway. And when the dollar eventually strengthens again, as it will, SCHY's quality holdings and growing dividends continue paying you regardless. Currency tailwinds are a bonus on top of an already solid foundation. You're not depending on the dollar to fall. You're simply collecting extra when it does. The SCHD angle nobody is talking about. Dollar weakness does not just help SCHY investors. It quietly helps SCHD investors too, through a completely different channel. Many of SCHD's largest holdings are American companies that do significant business outside the United States. Procter & Gamble sells products in over 180 countries. Coca-Cola generates more than half its revenue internationally. When the dollar weakens, these companies bring home more dollars for every euro, pound, and yen of overseas sales. Their profits rise, their ability to grow dividends rises. SCHD benefits through earnings, SCHY benefits directly through the conversion of every dividend payment. You own both. Both engines get a boost from the same currency shift, from two completely different directions simultaneously. Most investors holding both funds have never connected these dots. Most investors check their dividend payment, see a number, and move on. The investors who build serious wealth ask a different question every time income arrives. They ask, what forces are quietly working in my favor? And am I fully positioned to capture all of them? The dollar cycle is one of those forces. It is documented across more than 50 years of modern financial history. Every weak dollar period has handed international dividend investors a pay raise on top of their base income. The mechanism does not change. The pattern does not change. The only question is whether you are positioned when the cycle moves in your favor. You do not need to understand currency markets deeply to benefit from this. You need two things: the right funds and the patience to hold them while the cycle does its work. This video is for educational purposes only and is not financial advice. Always do your own research before investing. If this changed how you think about your dividend income, hit the like button and subscribe. Drop your answer below. Did you know the dollar cycle was quietly affecting your international dividend income? Or is this the first time you're hearing this? That conversation belongs in the comments. I'll see you in the next video. Smart investing, profitable results.